Did you know about 70 to $100 billion worth of estimated tax revenue is lost every year just due to loopholes? So how do the ultra-rich, the top 1%, hide so much money from the government and get away with avoiding taxes every year? Find out in today's video, wherein we present to you the top 10 ways rich people avoid paying taxes. However, before we begin the video, please do us a favor and subscribe to our channel. And don't forget to press the bell icon to never miss another video of the future millionaire. With that out of the way, let's get straight into the video. Number 10. Trust freezing. One of the most common ways the rich avoid taxes is by trust freezing, which is basically transferring valuable assets to others. For instance, your children, while avoiding the federal estate tax. They freeze the value of the assets years before they actually plan to pass them on, which excludes all taxes and asset appreciation from the estate. People also get around the estate tax from another similar method. They just hand off shares of their wealth to family members through gifts. For the tax year 2021, you can give any one person up to $15,000 tax-free. Before getting hit with the gift tax, you can actually give away $11.7 million of your wealth as gifts over your life, which is a sizable amount. There's no limit to the number of people you can give gifts to within one singular year. Just keep in mind that the $11.4 million threshold applies to both the gift tax and estate tax at the same time. Number 9. Sending money offshore or overseas. Whether during a heated political argument on TV or when your dad's friends are over for dinner, this method is one we have heard time and times again. Sending money overseas. Over $21 trillion are being hidden in offshore tax havens, one of the most popular cash handouts being the Cayman Islands, where more than 85,000 companies are registered. This is achieved by the rich registering their business or putting their money in an account in another country where the taxes are lower. Number 8. Through a charity. Perhaps the easiest way to avoid the estate tax is to give part of your wealth to a charity through a trust. There are two types of charitable trusts you should know of: Charitable Remainder Trust (CRTs) and Charitable Lead Trust (CLTs). The difference between the two is that if you have a Charitable Remainder Trust (CRT), then you can transfer stock or any other appreciating asset to an irrevocable trust. That way, you will make money off of that asset throughout your life, and when you pass away, the investment income into that asset will be donated to charity. This helps avoid capital tax gains and even lowers the estate tax burden. Our more cunning counterparts have also utilized this as a way to score tax deductions by deducting the fair market value of a donated item from their tax liability. Now, Charitable Lead Trust (CLT) on the other hand consists of assets that are locked up in your trust that will get passed on to a tax-exempt charity. You'll decrease the value of your estate and end up with an extra tax break by donating to the charity. After you pass away or after a pre-decided period, the value left in the trust is transferred to your beneficiaries. Number 7. By funding a Qualified Personal Residence Trust (QRPT). Another ingenious way to avoid estate taxes is to fund a Qualified Personal Residence Trust (QRPT), which will reduce the number of assets that will be subject to the estate tax. In a sense, with the QRPT, you're transferring the title of your home into a trust. This means that as long as the trust remains in the term, you can live in your home without paying rent, and after the end of the term, your beneficiaries can take over your property. Through this method, you can even freeze your primary residence and/or vacation home's market value and bypass the gift tax. The one thing you should keep in mind is that unfortunately, if you die before the end of your trust term, your home will still be considered part of your estate. Number 6. Playing their life insurance smartly. An additional way the rich avoid taxes is by making sure their life insurance proceeds aren't taxed. This is useful because although life insurance proceeds generally aren't taxable, they could be included in your estate after you pass away, which in turn would be subject to taxation. Creating an irrevocable life insurance trust is the way to avoid this situation. You will be setting up a trust and assigning the ownership of it to another person. The trust is irrevocable because in the future you wouldn't be able to make adjustments to it without the approval of the trust's beneficiary. By transferring over your life insurance policy, Your death benefits wouldn't be included in your estate. However, it is crucial to do this later in life because if you pass away within 3 years of forming the trust, then your life insurance proceeds would still be considered part of your taxable estate. Number 5. Put money away for retirement. A different yet popular method to avoid taxation is by creating a defined benefit plan which allows business owners to put away a large amount of money towards retirement. Depending on the situation, this sum could be more than $200,000 a year for an individual business owner. The new tax law has limitations on the 20% qualified business income deduction, which is why the rich find this method appealing. The implementation of a defined benefit plan will help bring down your taxable income and successfully reduce your taxes for the year. Number 4. Manage multiple investments. One way to utilize every loophole in the system and successfully save on taxes is to create a structure, for instance, a limited liability company to manage multiple investments. It could include portfolio assets, real estate, or a business. Although this has a tendency of becoming a bit complex, it allows many opportunities to arise that will ultimately help you save money, while at the same time building a governance structure for your assets. Number 3. Buying a house or yacht, big investments. If you can afford to, why not invest in a bit of luxury while also getting access to tax benefits? Ever wonder why the rich own yachts and multiple homes all over the world? Well, it's not simply just to achieve a certain status symbol. Owning these properties comes with tax benefits as well. Claiming a second home is an all-time favorite. For instance, if you spend a minimum of 2 weeks in a year on your yacht and furnish it like a home, while characterizing it as a second home for tax purposes, then when the value of your home appreciates over time, the profit from selling it can be considered capital gain and will be taxed at a lower rate than salary or other investment income. A second home can be rented for up to 2 weeks a year without needing the owner to declare the rent as income. Number 2. Creating a shell company. Shell companies are the go-to for rich individuals looking to avoid taxes. A shell company is a sort of company that only exists on paper, which allows the person who utilizes it to funnel money through it and avoid paying taxes. In a sense, the company only exists legally. It provides little to no actual services or products. People use these companies to their advantage by buying and selling through them, meaning that the person is not required to report international operations conducted through the shell company and will avoid taxes on the profits. Number 1. Equity swap. Our last trick for the day is an equity swap, which is a shadier method to avoid taxation. It's an official agreement that allows two parties to exchange the gain and loss of a set of assets without actually transferring ownership. Now, for two rich individuals or companies interested in reducing their taxes, this is perfect. One of these exchanges is generally secured to a fixed rate, like LIBOR, meaning that the participants can expect a fixed return either in one payment or at several predetermined points. Not only does this allow parties to avoid transactional costs, but also the local taxes implemented in certain regions. Ladies and gentlemen, that is it for the 10 ways rich people avoid paying taxes. If you have anything to say regarding the mischievous ways of the rich, we would love to hear from you in the comment section below. If you liked our video, do like, share, and subscribe to our channel. And don't forget us to join us another time for more of such eye-opening content. See you another time.